Welcome to today's episode of Wise Tech for Wise Money. Today's episode is titled From Compliance to Strategic CFO, Transforming SME Accounting with the Expert Eye. We will be discussing how forward-thinking accountancy firms are transforming from compliance-focused bean counters into strategic growth partners for SMEs, and the role AI and automation can play in that evolution. Before we dive in, I'll give you some quick context. I'm Gary Wayne, founder of A1 Solutions. We partner with business leaders to help them navigate AI, automation, and strategic planning to scale today's businesses. Today I'm joined by Saul Cohen, partner of the Expert Eye, an accountancy practice based in the UK that's redefining what it means to provide financial services to small and medium enterprises. What caught my attention about Saul and his firm is their three-tiered service model: compliance, insight, and profit smart, which systematically moves client from basic accounting to strategic CFO-level support. Saul's also an experienced podcast guest himself. He's done about 25 podcasts last year, so he has expertise in this arena. Thanks, Saul, for joining me. Good to talk to you. How are you today?
Yeah, really good. I'm glad thank you for having me on, Gary. I'm glad we got here in the end.
It's always a journey. Everything in life is a journey.
Yeah, absolutely. It's funny actually because I think when we first met, I'd done 25. I'm now on 36, so shows how long we've been trying to plan this one.
Yeah, you did another 9 or 11 before me.
Yeah, so we got there in the end.
Before we continue, can you give us a bit of background on yourself and how you got to be where you are? What made you choose accountancy, and how the Expert Eye came about?
Yeah, sure. So I think I've always loved building. I've always been quite creative. When I was young, my family thought I was going to go into architecture or engineering or something like that, and I think that was always been my sort of background. And when I went to university, well, actually, just before university, I fell in love with the world of business and economics. When I was at school, when I was exposed to that, I loved the idea of entrepreneurship. I just had such reverence for entrepreneurs early on. I think partly because my dad was a business owner himself, and I'd sort of seen that and sort of idolised it when growing up. And I sort of got swept up in it. I did economics at uni. I started my first business when I was at uni. It was just a small sort of, uni business. We thought we were going to take over the world, and it was my first sort of insight into just how hard business actually is. But that was interesting. And actually, I became an accountant because I wanted to add value to entrepreneurs. I thought, what I want to do is I want to surround myself by entrepreneurs. The more time I spent in the world of economics, the more I realised that actually the people who change the world are these incredible business owners, people who are entrepreneurs, who they come up with an idea, they're action takers, they're driven to create a positive change in the world, and they do that. And what I found really interesting is, while money is a motivation for everyone loves a bit of money and whatever, actually entrepreneurs, their primary motivator is something else, right? Often there's liberty in there and they want freedom and all of those sort of things, but actually they want to make a difference. They're not just motivated by money. It's not just about the money. There's like a passion in there to create a change in the world, and I loved that. And I just wanted to be around those people as much as possible. And I became an accountant because I was good at maths, and I was also I wanted to surround myself by entrepreneurs. And so I started my career at PwC, one of the best accounting firms in the world. When I was there, it was a fantastic experience, really difficult at the time, but in hindsight, look back on it only see the positive, as we often do. But loved every moment of being there and the work that I delivered. But what I felt was I felt something was missing, and that was at PwC. You're working with larger corporates for many stakeholders, and you're trying to balance who's the client and what their real objectives are. And I became an accountant because I wanted to work with entrepreneurs, and so I felt that I needed to step back and move into the SME world so that I could take the work that I was doing at PwC, which was amazing. I loved it. It was fantastic. But take that and apply it into the SME world. And it took me a little while to get that right. I took an interim job in between, which also was quite insightful. But then I started my firm. Firm took a couple of different iterations, different sort of styles. We started off as sort of, a management accountancy focused, and moved towards a standard accounting model framework over a number of years. But now that's how we operate. We're a firm of accountants, but we specialise in actually what we specialise in is mergers and acquisitions, and tax planning. Those are our two major areas. But absolutely, as you say, it's about taking our clients on the life cycle of business and showing them, exposing them to the areas of accounting that they may not necessarily have seen, but in large corporates is available for everyone.
Your mission statement says you want to be the most trusted accountancy practice, empowering successful SMEs to scale and prosper. How are you getting on with fulfilling your mission?
Well, look, we always have bumps along the road, but I think we're doing quite well. I'd like to hope that we're doing quite well. I think that ultimately, what that mission statement means to me, in terms of being the most trusted advisor to UK SMEs, it is about being known as the person that people will turn to. We don't need to work with everyone. I actually quite like the fact that we've got a sort of nice niche practice. We are a growing practice, but I think that growth has to come with an element of stability in the area that we're in. People always want to work quite closely with their accountant, and I think that's important. And so I think it's about balancing those two areas. But our reach is really expanding. Just being on podcasts, I'm able to reach many more people than I used to be able to, and start educating people, I think, on the first step, which is understanding what they don't know, because knowledge of what you don't know is often the most inhibiting constraint. Once you know what you don't know, then you're empowered to do something about it. The problem is that for 90% of people, business owners in there's no education structure. There's no one says this is how you be a business owner, and these are all the things you need to think of. Everyone just works it out as they go along. And so if they've never been exposed to an issue and felt it as a pain point, they've never been exposed to the fact that that's an area of knowledge that they've never been exposed to, something that they needed to learn. What's really interesting about entrepreneurs is 9 out of 10 times is when they know that they need to learn it, they'll go and learn it, and they'll probably be better at it than everyone else. But they just don't know that they need to learn it. And so in terms of getting on that mission statement, I think we're doing quite well. We're serving our clients quite well, growing quite well as a firm, and absolutely spreading the message. So, yeah, I think 7 out of 10, I would say.
Excellent. I mean, I think having been self-employed myself for quite a long time, I think the trouble is um, we have to learn by our mistakes. And, obviously you sound like an accountancy firm that can prevent that. From my experience, I've had to learn from my mistakes, and sometimes mistakes can be costly. So if you can get an accountancy firm like the Expert Eye that can prevent you making those mistakes, I think there's no price to pay for it, because I think everything in the world of finance has become so regulated and tight. You really have to be on the ball, and what you actually need, from my experience, is when you start out, someone's saying, well, this is how you have to go about it. These are the rules. This is what you need to do. This is what's paramount. This has got to be at the top of your list. And you've got to get this set in stone before you actually do anything else. Because if you don't have that base correct, your business will fail. Yeah, and I've learned that from experience. And I think I've been talking to a lot of CPAs in the States, and a lot of them now provide that service to startups. Let's get the finances correct from day one. Let's get the rules in place, the systems in place, and then we go from there.
Which I think
You
is
have,
important. I
yeah,
think the problem, the challenge with that, and we struggle with this just as much as everyone else, is making sure that people get the right information at the right point on their journey. I think that's the difficulty, because when you're at 500k in revenue, the strategy is different to when you're at 5 million, or even at 2 million, and therefore the financial information that you need, to review is also different. The things that you need to consider are different. The structure is different, and so it's about getting set up correctly. Absolutely, it's less costly to do it right up front, but it's about having the right information at the right stage, because otherwise what you get is information overload. And generally when you have information overload, what that does is you don't know what action to take, and then you don't take any action, and so the information is almost useless. So it's about having the right information at the right point, I think.
yeah, no, I agree. You have a partner, Jeff Lerner.
Mm.
How did that sort of come around, and how do you operate? Do you have different divisions of responsibilities? Do you have different, obviously,
Well, it's a funny one, actually. So
specialities?
Jeff's my father-in-law, and is one of, in my opinion, one of the best tax accountants in the UK SME space. He is a partner, but he's not so involved at all in the day-to-day, really. He's more, I suppose, a board advisor. He's a business owner who's run many businesses over the years. He's taken some knocks, and I was quite conscious of the fact that, particularly when I started, but even now, I'm still quite young. I've got a number of grey hairs, but I am. There's always more that you can learn, and I think that generally, when I speak to lots of business owners when they come to exit their business, and they will often say something along the lines of, "If I knew what I knew now when I was 35, I would be 10 times at 10 times. My wealth would be 10 times what it is now, at least." And for me, it was the ability to have someone who's been there, done that, and learn from them, and also bring in sort of a tax expertise as someone that I could sort of bounce tax ideas off, who is probably the best in the market, or certainly one of them. So that was how that came about. I think at the time his firm sort of needed a bookkeeping arm, and we were sort of doing sort of the outside of the finance function, so it kind of made sense. And then we both sort of went different ways in terms of, Expert I became an accountancy practice, and his firm decided they wanted the bookkeeping to be in-house, and so that worked. But I said to Jeff, actually, I've really appreciated working with you, really value it, and I want to continue to do so if you're happy. And so he is a partner, but he's very much sort of a board level advisor more than anything else. Not really advised, not operating in the day-to-day. I mean, he's retired now, really, so he doesn't really get involved at all in accounts or tax work. But it's more just, I've got someone to ask general questions to,
Yeah,
and that's quite useful.
it's very important in life to have a mentor.
Yeah.
Tell me, you talk about free tier service, compliance, insights, and profit smart. Walk me through the thinking behind that and how it actually works in practice.
So they've changed over the years, honestly. But where we're at right now is that I think that most people, when they think of their accountant, they think, I need to get my compliance ticked off. and I need to get my year-end accounts done. I need to do my tax returns, and I just want to get it done. And I think most people want to get it done correctly. They want to be as efficient as possible from a tax perspective, and they want to make sure that they're not going to get any issues afterwards. They don't want fines, they don't want penalties, they don't want headache. They just want it done quickly, simply, and efficiently. And I think we set up the compliance to basically fill that role and say, your average person, they come in, that's what they want. They want so what we do actually is we do a tax plan for them. We make sure that they're set up in a tax efficient way. In our experience, 80 to 90% of people that come in are not. They've never really had any tax plan, any review of sort of tax efficiencies. I think with all these things, it's about having sort of scalpels and not pocket knives. It actually came up in a conversation just earlier this morning, and I think with many people, whether it's acquisitions or tax planning, they've gone to a generalist rather than someone who's a specialist. So we've got tax specialists who work in our team who can come in and do the tax plan, and then it's about at the year end reviewing that and making sure that it's still relevant for your personal goals. Is it still building wealth for you in the future, and is it still growing? It's really built on the idea that if you can save 4K every year over your business life and invest that into a sensible, let's say, and get a sensible return, it will create £1 million worth of asset value when you come to retire. Now, and for us, we look at that and think, great, so if we can save each of our clients 4 or 8K a year in tax, just by making things a little bit more efficient, then that's something that really is going to pay them off in when they come to retire. So it's about that, the incremental gains. The next level, so the insights level, we're now calling it grow. We're about to sort of reframe them. So just keep that in mind. But the next level up is about having more of a strategic touch point with our clients. It's formalising the relationship a little bit more so that we can have more regular contact, particularly, so let's say quarterly, to have a quarterly meeting with our client, not just pick up the phone and have a chat with them, but a more structured conversation with them about what's going on with your business, how are things going on, starting to warm them up to a CFO. It's not really a CFO, but just understand strategically what's going on in the business. How do your numbers support that? Are you acting off of data or gut feel, and start getting them to utilize the data in their business, coaching them on how to use the numbers to support their growth. At this level, we start talking to our clients about acquisitions. Often that's the point where they're looking at making maybe an acquisition or a strategic acquisition. Some of our clients are making several, and we might have a conversation with them about what those acquisitions might look like, what type of businesses they're going for, how to structure those acquisitions, all of that sort of more fun, exciting stuff. And then the last one, it is the CFO service, but more than just the CFO service, it's about prepping the business for an exit. So increasing the value of the business, the valuation on the business, and how we're representing the business so that when it comes to exit, it actually sells. Again, it's built on the thing that 85% of businesses never sell, that are listed for sale, never actually sell. Most business owners are completely in the dark about what the exit process looks like, and sort of are just sort of left sort of trying to scramble. And most accountants only maybe work on 1, maybe 2 acquisitions a year, which is fine. But again, it's just not necessarily doesn't become a specialism for them. You know, I've worked on over 150. Some of the guys in our team themselves have worked on, 30, 40, 50 plus. So we together as a team, we've got quite a number of years worth of acquisitions experience, and we can really sort of understand what the value drivers are, and help our clients sort of work on improving those valuations in their businesses. Yeah, so those really are what the three tiers are and what they're geared up for.
So when a client comes in, do they come in at a certain tier, or do they
Um,
just come in as a general client,
it
and
depends
then
on the
obviously
client's needs. It really depends on the
move?
client's needs. Most of our clients will come in, they'll start on compliance, they'll move up to the sort of what we're calling now the grow package, and then when they're thinking about exit, we'll move on to the exit preparation package. But we are now getting clients who are just coming in straight away at the exit pack because they're thinking about an exit. And also another thing that sort of changed it is we're looking at this as now like a sort of we are getting clients from abroad who are also either looking to invest in the UK or sell their businesses in their domestic markets. And ultimately, valuations are the same, or valuations work in the same way. And so we're looking at seeing how we support those markets as well. So it's quite a lot going on. But yeah, absolutely. It's more about tailoring what the client needs to the package rather than just saying, here it is, this is our bog standard off the shelf thing, go in here and do it. It's much more, I always say to my clients, I'm like a chef. You tell me what you want and I will try and make you the best thing that I can make based on the government constraints and all the other things that go on in the world.
When you talk about CFO, do you actually act as a fractional CFO for businesses, or you still sit in the accountancy seat giving that CFO advice?
Yeah, so not me personally. It's not my skill set. I'm very much into, again, just trying to make sure that we have a specific skill set that we're really good at. You can do anything, but you can't do everything. So again, I could do it, but it's just not my area of specialism. So we work with CFOs who are really, really specialist in a particular industry, a particular type of growth journey. So maybe it's acquisitions, and what we try to do is place the right CFO in the right business. Sometimes we work with CFOs that we have in our pool and they're part of the expert eye, and sometimes it's just we help recruit an external CFO on behalf of our clients. So yeah.
So if I'm a startup or a very new company and I actually can't afford a CFO, am I able to get CFO sort of ability from your company to sort of help me along the way until I can afford my own CFO?
Yeah, so the way it would work for us is, well, I think there's two things there to unpack. The first is just making sure that you're getting good value from your CFO. And I think if you've got a what happens with a lot of businesses is they've got budgetary constraint. They say, I can afford to spend X, whatever it is, £500 a month or whatever it is, £1,000 a month on a CFO. They spend that on their CFO. They know that they need more visibility on the numbers. The problem is that what ends up happening is the CFO ends up crunching financial data because you haven't actually got the data available for them to do any smart analysis. So they're not giving you strategic level advice using the data or anything practical or being clever like a CFO would normally do. They end up spending time doing the levels below CFO. So financial controller or analyst type roles where they're either collating the data and verifying its accuracy, or they are analysing the data and putting it into reports that they can use to give you some information. And so what ends up happening, they're just reporting on information that's there rather than giving you a strategic soundboard on that information. So I think there's two things really there to unpack. If for our clients, they can't really afford that, we always say to them, get a good bookkeeper to make sure that you've got accurate data going in. Because if you've got poor data going in, then everything coming out is going to be in nonsense and it's almost not worth the paper it's written on. So let's make sure that we've got good data going in. a sensible check going on at the end of the quarter, and then just have a more strategic conversation based on the information that you're getting. Maybe use a few simple KPIs, 3 to 5 that you understand. Track those. Track a little bit rather than a lot, so that you can actually make improvements on that information, and then have a conversation with us. So yeah, absolutely, we do offer those services and do it. But again, it comes out to be, it really depends on what the client needs and understanding that. So we offer bookkeeping services, but sometimes our clients get to a certain size or a certain need, and we have to be sort of grown up about it and think about what's best for the client. And we sort of say to them, right, you know what, you've got to the size where you need more regular reporting now. I think you should get a bookkeeper in-house, for example. And so, again, it's always at every stage of the journey, you need to make sure that we're giving the right level of service for what they need right now.
Excellent. Let's talk about exits for a minute. Exits is a big thing. People are always talking about it. They obviously want to retire, whatever, move on. They've been doing their business 10, 15, 20 years, sometimes shorter, and all of a sudden they think, well, you know what, I'd like to make a change. I want to exit. But hold on a minute. They're not in a position to exit. How many people come to you when they want to exit, but sadly they've done no preparation. Their books and everything aren't ready. How long does it actually take them? And I know every company is going to be different, but if we can just use an average to get ready to exit, because if a company is not ready to be sold, their exit plans are going to have to be put on hold.
Yeah. So I always say that the best time to think about your exit is before you start your business, and the next best time is today. It's one of those cliches. I think, and I do think that makes a difference, because I think that when you start with the end in mind, you've always got something to work towards. And if you think about it, when you're selling to your customers and you're thinking about how do I present my offer and market my offering, what language do we use, what pricing do we use, we're always thinking about what does our customer want, what are their pain points, why are they making the purchasing decision. When we're putting our products together, when we're putting our services together, our solutions, whatever it might be, we're thinking about the customer. But when you come to sell your business, for some reason, business owners who have become, marketing geniuses or sales geniuses by the time they come to exit their businesses, that all of that information just goes out the window and they forget to apply it, and they treat it like selling a house, and they just put all of their trust into the broker, and it all becomes a mess. And actually, it's exactly the same process. We want to really think about who's my ideal buyer. You might not sell to your ideal buyer, but have that in mind. Who is my ideal buyer? What do they look like? What are their pain points? What are they buying my business for? What problem does it solve for them? Right? And it might be that it's a family office or a private equity or a strategic buyer. That's fine. But you've got that idea. And you can start already subconsciously to build the assets in your business, the systems, team, etc., to slot into those buyers. Just doing that will absolutely change your valuation in your business. It absolutely will. The next thing, I think, to answer the question that you actually asked, which was, when should they really start? How long does it actually take? How long do they need to leave? I think that in an ideal situation, really what happens is they've got 5 years. 5 years, I think, is if they've never thought about it, within 5 years, we can comfortably put everything that needs to be in place. You can completely transform your business, move it into a completely different way, and you've got a nice long runway to be able to demonstrate to a potential buyer. You've got nice here's what the journey looked like. Here are all the changes that we've made. And I think any business could transform itself massively in 5 years. And so anything could be done in 5 years. Most businesses have 2. They give 2 years. 2 years is a bit of a push. I say that because often it takes a year to find a buyer. It takes a year to find a buyer, and you've got to remember you want the right buyer. It's about the people. You want the right fit for your business. And generally, if you're working with a good broker, that does take time. And then the process itself, from negotiation, etc., that can take 6 months, 9 months to close, right? And so if you've only given yourself 2 years, you've not really given yourself that much time. And this comes back to why I'm saying you want 5 years, because you want to spend 3 years prepping your business for exit, and then 2 years actually being ready for the exit and having the negotiations and the conversations, etc. But if you need 2 years, it can be done in 2 years. But yeah, I think in an ideal situation, as I said, do it from today. Start thinking about what you need to have in your business for an exit. But secondary to that, 5 years. Secondary to that, 2. I mean, we've had people come in saying they want to sell in 6 months. I mean, they won't sell in 6 months, but we can do what we can to prep the business for in 6 months. Again, we'll be able to do the low-hanging fruit, but you can't tackle everything. So we work on constraints based on what the clients give, what the client have left us with. But ideally, as I said, I really think it's a 5-year journey if you haven't already thought about it.
On your website, you spell out 6 core values. When I read it, using growth-minded, respect, ownership, wow-focused, thoughtful, and honesty. That's quite profound statement. How do you manage to adhere to all this day to day?
Look, so I've always said, well, I haven't always actually. It started because when I first started the business, we grew to a certain size and then really struggled. And what I realised was that we were struggling because the culture internally was just all over the place. We had lots of nice people, but there wasn't really a work ethic, and there was nothing that really tied us all together. And what I've come to realise is that if you show me someone's values, what do they as an individual care about, I will be able to predict where they will end up in the future. And to me, these things, they're up on the wall as well. Try and keep them always at the forefront of my mind. Those are the things that I'm striving towards. Those are the traits that we want to embody always. Those are also the traits that we want our clients to care about. Do we always adhere to everything all of the time? We're human beings. No one's perfect. We're always going to slip up from time to time. As you say, they are ambitious things to be living up to. But I do think that is what we want us. Those are the type of individuals that we want to be working with, that we want to be surrounded by, that we want to be emulating. And absolutely, those are the attributes that we really care about. So those values, we put a lot of thought into them when we came up with them as a team. But yeah, we do try and hold them in the forefront of our mind always.
Looking at accountancy today, it's heavily regulated. It's become more and more regulated every year. How difficult does that make it for you to save for 4 to 8K a year and do the job you want to do? Within obviously the legal realms, because obviously it's become so much more difficult to be creative.
Yeah.
And I don't mean that in a bad way. I mean, the rules are very tight.
Yeah, what I would say is I think it's true. I think it's a shame because there's some changes that have happened that are good, some are not so good. I mean, right now we've gone through a period where there's been lots of really actually poor, I think, changes, things that have changed. I just think have been a massive shame. And it's not a bash at any particular government. both Labour and Conservatives have made decisions that I looked at and I thought this is a massive shame. Entrepreneurs relief is the principal one. I thought that was, I think, Rishi Sunak who originally changed that into business asset disposable relief. And honestly, the change in name from entrepreneurs relief to business asset disposal relief should tell you everything that you need to know about what that change was, right? We've got entrepreneurs relief, right? We're here for entrepreneurs, and then we've changed it with some corporate, boring, business asset disposal relief, and we saw a real shift in it, and I think it started to change the entrepreneurial landscape in the UK. I think that's a massive shame. It absolutely has got harder to, as you say, save that 4 to 8k every year for our clients. But we can only work against the benchmark, and taxes are going up for everyone. And if we can, against that benchmark, still make sure that we're saving 4 to 8k, then we're doing our job. What I would say is actually, if anything, when legislation's changing as much as it is right now, it's almost more important to have someone who's constantly reviewing things, because the advice that we're giving today is not the same advice that we were giving last year, because the landscape's changed and legislation's changed, and what the most effective way of extracting finance from your business is today is not the same as what it was last year. And so, yeah, absolutely, it's got harder. The landscape is changing, and not to favour entrepreneurs, unfortunately. But there is still the stuff that we can do. And yeah, we can still be, we just need to sort of continuously be on our toes a little bit more than we were able to be, I suppose last year or even 3 years ago. We could probably, things were much more stable, and what worked then probably had worked for 10 years maybe, or 5 years in some way, shape or form. But now I think you've got to be a lot more agile.
So when you're structuring business, businesses for companies or entrepreneurs, it must create a lot more work, really. You have regulations in place one year, and all of a sudden, and you've set everything up to accommodate that, and then this year it's all changed. You've now really got to undo that and restructure to fit those regulations. So, from an entrepreneur's point of view, and even your point of view, you're always creating work.
Yeah, I mean, we always make sure.
A headache as well.
Sorry.
Obviously, creates a bit of a headache as well.
Yeah, absolutely. Now, we always try and make sure that when we're making a change for our clients, it makes sense practically, not just, incrementally. So, for example, if something's going to cause a whole load of headache to change it, and it's only going to save maybe like £1,000 a year, and, after cost, save £1,000 a year, then we're not going to bother with it, because it's just not worth the headache, and things could change again next year. We might flag it and let the client make the decision, but we'll absolutely say to them, look, this is just not going to worth it. It's going to create a whole load of admin, and it doesn't really save you anything. It saves a small amount. If you want to do it, we can, but it's not. We're looking for things that are going to make a slightly bigger difference than that. And we can't always guarantee it, so we have to crunch the numbers and see what works, and sometimes what works for one person doesn't work for another, but it's always about, we crunch the numbers, see what works, and make sure that the savings are genuine savings beyond the amount of work that will have to happen, etc. So fully costed savings, I would say, net of all expenses.
I interviewed a guy yesterday, very interesting, created the EIS, and I was interested. Is that widely used nowadays by entrepreneurs? You have the SEIS scheme and the EIS scheme, i.e. the enterprise scheme. That's still widely used and widely asked for by clients.
Do you know what? It's funny because they're not as widely used as they used to be, which is interesting. They used to be really, really popular. But over the years, we've just seen them less and less. They are still used. I think they are still they're a valuable scheme, but I think that, yeah, as I say, they've just been used a little bit less. I think part of that is I do think that there are less startups who were using those types of startups that were using the scheme to attract investments are not really looking at the UK as a place to start up anymore. I think that's a bit of a shame. But yeah, it's a shame because there were lots of really good investments with the EIS and the SEIS. There still are, but yeah, they're just. I don't know. It could just be me. It could be that we don't see as many as we used to. But I definitely have seen them being used less. But that's just my own experience.
Going back to podcasts, and you said you've done 35 now. How do you actually do those? Are you doing them with people like me, or do you run your own podcast series?
Yeah, yeah. It's funny. We just I get invited from, yeah, as I said, with people like you. I don't have my own series. I have thought about it. It's just one of those things. You can't do everything. You can do anything, but you can't do everything. And I just, I've got a book coming out shortly in sort of June, and the focus has sort of been on that.
Well, what's it called?
Well, we've got a working title called Searching for Gold.
Right.
It's about making acquisitions, but I'm not sure if we're going to settle on that or not.
I'll be sure to read it.
Yeah, thank you. So yes, so we got that coming out, and there's always something to do, isn't there, as a business owner? There's always something on your list, and I really enjoy going on and having a conversation with different podcast hosts, and I love the people that I meet through it.
Yeah, no, me too. I talk to people all around the world. You learn so much.
Absolutely. I think if I was to do one, I'd probably do it as a clinic, like a drop-in clinic. I think that sort of, to me, it makes me feel, I quite like that. It sort of excites me a little bit. If we had like a sort of a live drop-in clinic where people could drop in, let's say on a Friday morning, and give me whatever problem they've got, and we try and solve it live on the call. That would be quite cool, I think.
Yeah, that would be good. Talking about business generally and where we are today, what's your biggest challenge right now as a company? Is it client acquisition, team capacity, service delivery? How are you building and how are you finding business, and what are the issues, if any? Everybody has pain points and bottlenecks,
Yeah,
etc.
I think all businesses have the same issues, don't we? I think Daniel Priestley always says that everything's downwind of lead generation. So if you can crack lead generation, then you can solve each problem slowly but surely. I quite like that model. I've never really listened to it, which is a shame. Maybe in the next business I start. But I think it's about, for me, the thing that I've always struggled with is about getting everything right in balance. So having the strategy right together. And so, I think CEOs are often quite sort of torn between this, where you go really deep into trying to customer acquisition. So you do marketing, content, etc., newsletters, all of that sort of stuff. You get a whole load of clients, and then you need to think about delivery and team and all the internal processes. And I think in an ideal world, what happens is you're servicing the team and building capacity as you're growing the business, but it never quite works like that. Well, I think that's what I struggle with is making sure that we've always got that the ability to plan. I don't know if it's the ability to plan, but the ability to strategize in the right way to make sure that our client delivery and our client service always matches with the capacity that we're bringing in, with the new work that we're bringing in. I think that I'm always either flipping from one to the other. So we focus on the business, then we've ignored new business coming in. So we've got really good product, but we need to go out and market. Then we go focus on marketing. We get loads of new business in, but then we've got a capacity issue and sort of the deadline starts shifting and we've got a bit of a problem on that. And we don't want that. We want we want to be able to service our clients in a fantastic way and make sure that we're delivering constantly. But we also want a solid flow of leads. And so I think that's really what I've always struggled with in business, is making sure that we get those two things done in balance.
You need systemization to monetize. Tell me if you, before we wrap up, it's been really interesting. I did go off agenda a little bit, but I'm just interested in so many things.
Thanks.
I couldn't help but ask all those questions because over the course of my podcasts, I hear so many different things, plus my own personal experiences. I just love to learn more from guys like you. If you could wave a magic wand, I always ask this question, what would you change today that would make your life and business so much better?
Processes. I just have. When I was at PwC, the systems that we had, the processes, everything was amazing. I mean, and they'd spent probably billions over years to develop that, right? You know, they had their system for their accounts preparation system, their practice management system. Everything was incredible, and I went from that into the SME world where I'm trying to sort of patch everything together. And it's much harder. And if I had a magic wand, I would have one of those systems, like an overall sort of an enterprise level system that would manage everything and it would know our clients and whatever. And maybe in the age of AI, we will have that. But that would definitely be my dream.
Well, we can discuss that later, actually. So, okay, that's great. Yeah, I did have a little bit of a different blend, but yeah, we can save it for other conversations. Yeah, we've been on for 45 minutes and it's been very in depth. And I think the listeners will know, what great services you offer and what a down to earth service I think it is. If guys want to get hold of you because they need a new accountant, which I think many people probably do, they certainly need one like you, Saul. Where can they get hold of you and where can they find you?
So LinkedIn, I'm always posting on LinkedIn. There's loads of content on there, loads of hints and tips as well about acquisitions, if that is an area of interest. Or you can drop me an email. We've got a newsletter as well that we circulate with like tax tips and ideas as well. So so probably LinkedIn's your best way to sort of get a hold of me first.
All right, Saul, I want to thank you for being my guest. I want to thank the listeners for listening in. I'm Gary Wayne, A1 Solutions International. You can find me on LinkedIn as usual, doing my podcasts and snips and blogs. You can also get me via my website, www.a1solutionsintl.com. It's been great to do this podcast. It's been great to talk to Saul, and I look forward to the next one in the next couple of days. Saul, thanks very much for talking a second, yeah?
Thank you.